What's really going to pickle your brain is the fact that this is probably you, and this is probably you. You're paying for the use of your own money using a bank as an intermediary. They're making the money off of you here and off of you here. It does not make sense. Why? Because we don't value our own money.
At IB Canada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
Hi everyone, Michael Sidhu here, and I wanted to spend a little bit of time talking about why you need to value your money. Because if you don't value your money, somebody else will. If you're not making money on your money, somebody else will. And these are just basic, true facts. The golden rule is simply this. Well, the other golden rule, you know the real golden rule, but the other golden rule is he who has the gold makes the rules. So we need to really think about, why do we give away so much of our earnings over time, and is there a way around that? But fundamentally, I think there's a problem, and that problem is that we don't value our time. Why? Because money equals time. We spend so much of our time making money that we don't really realize that these two assets are assets that we kind of throw away, or that they're disposable. Well, I got news for you. Nobody's getting out of this world alive. So as much as you value your time, you have to value your money. What I want to do is I want to show you how banks value your money. Again, let's start with the basic premise that you spend your time building active income and you save up enough, and hopefully everybody's hope is that they create more passive income than active income. That's really financial independence. But what do you do with that money? So you spend your time, you spend your hard-earned time making hard-earned money to deposit it into a bank, and you become the depositor in the bank. Somebody comes along and they borrow that money. And whose money do they borrow? They borrow your money. They borrow your deposits, whether that's a term deposit, a guaranteed investment certificate, or even your checking account. Banks, yes, banks lend out their checking account. That's a topic for another time. But you're either going to divert your money here and then eventually spend it, or you're going to invest your money, right? Wherever you spend your money, as before you spend it, the borrower is going to take that money and use it, because banks make money on volume and velocity of interest and volume and velocity of the money. Money parked in our hands is money earned in the bank's hands. Ultimately, what are banks paying on deposits these days? If you're getting paid 1% by the bank for the use of your money, they are lending out at 4 to 5% on average, the Canadian average, when really you should be the one that's earning the 4 to 5% average. You shouldn't be being paid by the bank for that use of your money. Ultimately, the bank's profit is somewhere around 400%. Most people think it's 4%, but what they're forgetting is the actual numbers and not the percentage. So, and if you're using a bank to invest in an RSP, how do you think they're generating the return on that RSP? You'd be right if you said they're lending out that money. Remember, if you're earning 1% on your deposit and the lender, the borrower, is paying 4%, you're earning 1% on your RSP because somebody else is paying 4% for your RSP. What's really going to pickle your brain is the fact that this is probably you, and this is probably you. You're paying for the use of your own money using a bank as an intermediary. They're making the money off of you here and off of you here. It does not make sense. Why? Because we don't value our own money. We don't value the system which we use, and there's a word called hegemony, which means banks have done a very good job of making sure you think that the only way that you can bank is through a bank. There's many different alternatives. There's many different options.
IB Canada Group, your independent authority for information on the infinite banking concept.